Welcome, guys, to Before the Millions Trading Academy. If you are a returning subscriber, shout out to you. Welcome back. If you're new, I promise you are in for a treat today. We're going to be breaking down market structure in the most simplistic way you probably have ever seen. Um, this is going to be the last market structure training you're ever going to need. And I'm just going to help you really understand market structure, right? So, understanding, of course, first and foremost, a lot of you don't understand that market structure is the foundation of everything you're going to do, regardless of what strategy you're trading, type of trader you are. You have to know the market structure. And what is market structure? Market structure is the environment, right? So, market structure, I want you guys to look at, right? I want you guys to look at market structure as the environment which you're trading in. You know how they say don't bring a knife to a gunfight? It's the same thing when it comes to trading. You have to know the environment you're in. What do I mean by environment? Well, if we were to look at, for a beautiful example, battle. When people go to battle, right? Or looking at war or anything like that. If you want to capture somebody and you have to be stealthy and quiet, you might want to use a knife, you might want to use a rope, you're going to use some type of weapon that's not loud. You have to use the right weapon in the right moment. Same thing in the market. There's times when the market is trending, there's times when the market is consolidating, there's times when the market is kind of choppy. The market structure is understanding the environment. What environment am I in? Based off the market structure, what is going on here? What's most likely to happen next? If you understand how to identify what current environment you're in. If you know how to identify when this environment is ending, when it's beginning, you know exactly when you need to apply what tools when. Certain strategies work best in trending markets. If you keep using them when the market is no longer trending, you will hurt yourself. For example, moving averages. Moving average only work depending on how you use them, but 98% of the time, how they're used only work in trending markets. If you do not know how to identify a trending market, well, I'm sorry, but that tool is literally useless. In a gunfight, a knife is literally useless, right? So, this training, you're just going to get a very, very simple, straightforward understanding of how to identify market structure, how to identify shifts in market structure, how to identify exactly what's going on in the market at any given time. So let's go ahead and get into it. So, first things first, I want to lay some ground rules for those that do not understand much about trading. I'm going to boil market structure down into 3 to 4 main categories, right? You're going to have one is a trending market. Now, let's go ahead and define a trend. Now, uptrend is what? Series of higher highs and higher lows. Sorry, I don't understand. And look, Siri think I'm talking to her. And a downtrend is a series of lower highs and lower lows. Now, I want you guys to really quick understand what this means. What is a series? You're looking at TV, a movie, or anything. A series is when you have one more than one movie. When they have a sequel, when they have another one coming out, 2 to 3. Plus, you know that okay, this is a series. This is happening over and over and over again. So we need a series for it to be a true uptrend or downtrend. Now, consolidation, right? Slash arranging market is when the market is trapped between two levels, right? And you know you're getting a series of touches, right? And I'll just put it like that. We get a series of touches between the same two levels, right? So we can keep that series going, right? So again, if I'm getting two or more touches of the same level, I know I'm in a consolidating slash ranging market, right? So these are the key environments, and anything in between that is the market is just figuring itself out and maybe transitioning or something like that. You do have those type of situations, but these are the primarily the three different um, you should say environments when it comes into the market. So anytime I'm looking at the market, I'm pretty much just trying to figure out which environment am I in so I can understand what to do next, or what environment is likely to happen next so I can understand what to do next. So let's go ahead and start right here. When the market was here in a downtrend, I want you guys to go ahead and grab your path tool over here. And this is a tool that you definitely want to get used to using, and it's going to really help you identify these high and low points in the market. So when we talk about higher highs and higher lows, what are these high and low points? These high and low points are these pivot points here in the market, right? So you see when the market was coming down right here, and then it stopped and started coming back up. This right here is a pivot point, right? This is a pivot point. When you see the market pivot and turn around, you have a pivot point. Now, if you're not good at identifying this or you want to get really stronger, what you can also do is grab your Hakanashi, right? Your Hakanashi candles, it primarily just it's really good with training, and it lets you know when you have um, if the market is going in one direction, it will stay consecutively that color. So you can look for the color swaps, right? So you can see your red, 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 red. So when we change to blue, this color swap right here, this is a low, right? Color swap, this is a high, right? See, when we change, we're getting red, 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 then we start swapping to blue. That's a low, that's a high, that's a low, that's a high, right? So this is a pretty nice tool that you can actually use. Low, high, low, high, right? That you can use to start to identify, these low and high points. Now, let me go ahead and show you guys something. This is actually a perfect place I can show you guys. So here, this will be identified. This entire time we were here can be easily identified as a down trend. Why? Because we're getting a series of lower highs and lower lows, right? So now the question is, okay, well, I identified that this here is a downtrend. I'm gonna draw it again. Low, high, low, lower, low. This low is lower than this, and you're always comparing the most recent lower high to the most recent one. So this low is lower than this, so that's a lower low. It became high, right? The market went higher, and this high is lower than this previous high, right? Then we went lower, then high, lower high, lower low, lower high, lower low, right? Lower high. Now look at this. Boom. I want to point something out for you guys. Now, if you notice, the market came here, made a lower low, made a lower high. Pay attention. Made a lower low. It's very important right here. Lower high. Made another lower low, and watch this. Made a lower high. But notice it made a higher low here. Because this low point right here, this low point is higher than this low point. Right? So that's a higher low. Well, I want you guys to stop and think real quick with me, right? What's the characteristics of a downtrend? Remember, it's over here for us. Oh, I deleted it. Oops. The characteristics of a downtrend is a lower high and lower lows, right? Actually, that is so important that we got to get it back. We have to get it back. That right there, we have to be able to pull that up at any given moment. Let's go and grab that real quick. Where is that at? Here we go. All right. Copy. Cool. Got to make sure we good. We got the tools. We got to make sure we got the tools. Yes, sir. All right. So let's go back to where we were. Cool. So let's go and look. And this is now 100 on H1. So look at this. We made this low, low, made a high, made a higher low. Now, guys, remember what the characteristics of a downtrend is? The characteristics of a downtrend is higher highs. Lower lows and lower highs. Look at this. Lower lows and high and lower highs. But if I'm getting a higher low, that's the characteristics of an uptrend. So that's giving you the sign that, hey, we may be getting a shift in trend. I want you guys to start to notice that when you're in a downswing, you start to get higher lows, right? Or you're getting a higher high. I want you to start to pay attention to what's going on, right? We may be getting a shift of trend. Now, let's see what happened here. And I'm going to show you guys the exact moment when you got the shift of trend, because that's what people don't understand. At what point did my trend go from downtrend to uptrend? At what exact candle? I'm going to point out for you guys. So you got the low, you got the high, got a low, right? The market came, made a lower high again, made a higher low. Now look at this, made a higher high, because this high, right? This second high is higher than this next high. Then we came, made a low. Then, and guess what? This is a higher low. So guys, guess what? We just got two higher lows back to back. What is that starting to sound like? A series. Remember, two or more is a series. We have two higher lows back to back. This is a higher low because it's higher than this. And then this is a higher low because this low is higher than this low. So we just got two higher lows. And then, as you can see, what did the market do? Went up again, giving us another higher high. So let's run this back. Let's make sure we understand exactly what just happened here. Wait, we made a low, made a high, made a lower low, made a lower high. Then made a higher low, one higher low, right? Then made one higher high. Then made another higher low. So now we got two higher lows. And now we just made another higher high because this is higher than the last one. That's two higher lows and two higher highs. What does that sound like, guys? Two higher lows and two higher highs. That's a series. What does that sound like, guys? An uptrend, a series of higher highs and higher lows. Ooh. So at what exact point did it happen? Let me draw out the diagram for you guys. It's very, very simple. The market will be in a trend. At some point, right, it's going to start to break its rules. You're supposed to be making higher highs and higher lows. So in this case, what happened was the market came, made a higher low, higher high, higher low. Remember, a series is two. So we got two higher lows here. We need one more higher. We need the last higher high. That's that right there. The minute we break this high, we're now officially in an uptrend. Now, guys, what does this look like to you guys? Doesn't this look like a head and shoulders? does this look like a head and shoulders? This is why that's a principle, because this is the principle of how the market moves and how it works. We had a left shoulder, a head, a right shoulder. We have our neckline. Market broke our neckline and change of trend, right? That's what they teach you. But you're so focused on the pattern that you're missing out on so many changes in structure because you're so focused on the pattern. All right? I need to start focusing on the structure. It can happen multiple ways. You can either have it happen like that, or right, you could be making a downtrend and then the market will come and break a high automatically. Break a high automatically. Right? And then what it's going to do, come give me a low, and then come give me a high. And at that point, at the break of this high, I automatically have an uptrend. We have that change of character. We have that series of high lows and higher highs, right? So let's go ahead and point it out in the market. Show you guys exactly how this thing is happening all day long, right? So now we had our head and shoulders pattern, right? As you guys learned that before. Let's remove all this. I can actually draw the head and shoulders pattern for you guys. Left shoulder, head, right shoulder. Right? And then you go along, So let's remove this because I don't look for that pattern at all. But That's exactly what happened. I want you guys to pay attention. Like I said, market structure is key. Market structure does not lie. Market structure is going to do its thing, right? And it's going to let you know exactly what's going on. So, as you can see here, we had that downtrend going on, and then we had the high, second high, shift of structure. Now, as you can see, my lows here. I want you guys to pay attention to this. The low that creates a new high or a new low is the most important place in structure. When the market establishes a trend, like a higher lows and the uptrend, the lows are the most important. Excuse me. The lows are the most important, right? You really don't want it to break its lows, especially the low that created a new high. So as you can see, this low here broke this high, right? So this low is important. So as you can see, as the market approached that low, right, came here, even made a lower low. But one, this doesn't change the trend. Just because I made a lower low does not change the trend. That's only one. I need a series, right? And as you guys can see, what started to happen? We began to push in a up trending manner. You know what I'm saying? So you really want to start to be able to identify what's going on and see these shifts in trend. Let's go and identify a different one. This is a nice one right here. And we can look at all these shifts, right? So starting from the bottom here when we had this downtrend, market came up, came down, broke structure. This low is key. I'm paying attention to that. Came here, pulled back, broke structure. You zoom in. So this low, I have to pay very close attention to it. Market shouldn't break that. According to my uptrend rules, I should be getting high highs and high lows, right? Low, high, low. It's my low here. Market, what did the market do? And as you can see, it always respected this low. It's going to respect that low unless it wants to change trends, right? It came here, give me a lower high because it didn't make a higher high this time. Came back, respected my level, then boom, went and broke structure. Now this low is very key to me. I'm really paying attention to that low. So if you guys notice what happened here, let's notice the shift in structure. Let's go to notice it. So we're still uptrend friendly, low. We haven't broke our lows yet. We're still fine. I'm still looking, thinking bullish. I'm thinking to buy. Market came up, broke, made a lower low. That's my first lower low. Market has not officially changed its trend yet. I'm waiting. Come up, make a lower high. This is lower. I'm looking at the body. This is lower. And then, boom. So notice how, started from here. I had a high, low, lower high, lower low, lower high, lower low. Obvious downtrend. You see the shift in structure? And then look at this. Look at my high. This is the high. This is my high that broke this structure. You notice how when the market came back up, it didn't break that high. This is a very key level. Very key level, right? So now, boom, this low is very important to me, right? And then we get a touch, and then the market starts to range in this area. Remember what a range is? A range is when we get two or more touches in the same, stuck between the same level. We have this touch on the top, and this touch on the bottom. We have this range going on over here, right? Because we had a series of touches in that same range. The market wasn't trending anymore. And then it finally broke, and it began to trend again. So you have to really understand where you're at in the market, understand what's going on. We had our low. I probably just drag this all the way down here. Boom, boom. Right? Had this big pullback, and then we had this big dump. Oops. And we had this big dump. Right? So, and then let's go ahead and look at this one last change of trend, right? I'm really the key thing I want you guys to start. Number one, identifying where you are. Number two, knowing when where you think you are changed. So we're in the downtrend this whole time. You're thinking sell, 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 right? Pull back, lower low. Still thinking sell. Lower high, higher low. Uh-oh. Okay, I'm not worried yet though. I'm still thinking sell. I'm not too worried. And then break up the high. Boom. Now, when this high, remember I told you guys, this high is really important to me. The high that broke the low is super important. Once that high gets broken, I'm done taking trades until a new trend is established. Until a new trend is established, right? So over here, I probably would have been willing to take a sell here just because it came and made a lower high. I'll still be willing. And even though it didn't make a lower low, even if it came back to this level and didn't break it, I'll be willing to take a sell, right? Depending on my strategy, on my confirmations. But once that high that made it lower low gets broken, I'm done. I'm really chilling until a new trend has now established itself. So guys, officially I have a lower high. I have a higher low and I have a higher high. Now let's see if we can get it to happen consecutively. Now I have another look, higher low. We have three in a row. Two in a row. And then I get one more higher high. Look at that. The trend started to change. And after that, what happened? Guys, look at this. Went crazy. Now you got you a beautiful uptrend that flew forever. Right? That flew forever. Right? So I know this is a big jump for you guys. Remember, the key takeaways of this. Number one, always identify where you are. If you're in a downtrend, you'll be seeing a series of lower lows and lower highs. If you're in an uptrend, you'll be seeing a series of high highs and higher lows. If you're in the consolidation, you'll see the market consecutively playing in one range. Now, sometimes the market is in transitional period from a trend to another, or consolidation to a trend, or trend to consolidation. If you cannot identify clearly an environment, do not trade. Leave the market alone. Right. That's the first thing. And the second thing is, remember, if you're in a sell, let's say you're in a downtrend and you're looking to sell. Once this high that broke the low, that breaks a level, I want you to understand there's a lot of liquidity. Like, this is a very strong high, very strong level. Just like, think about it like this: enough volume came from this level to break a low. So yeah, it's pretty strong. So if this level, if I'm in a downtrend and this level was to in any way, shape, or form get broken, I'm no longer taking trades until the market does this thing, establishes this trend where I got my high highs and high lows. Then I wait for my pullback and look to take my buy off of that because the trend has changed. All right, so I hope you guys got a lot of value from this. Go ahead and enjoy your day. Keep killing the market. Let's keep winning. Make sure you subscribe, like, share this. I know you guys have been loving the content I've been dropping. I need y'all to keep rocking with me. If y'all keep rocking with me, I'm going to keep rocking with y'all. Keep dropping more gems for y'all. I just want to make sure you guys are actually gaining value, that I'm not wasting nobody's time. All right, so go ahead and enjoy your day. Go ahead and kill the markets, man. We out of here.